We did it, guys. 1, 2, 3, 4, 5. $500 in dividends every single month. In today's video, I'm going to go over my portfolio. I'm going to show you guys how I'm able to collect $500 every single month on average from this portfolio. And I'll give you some tips that I learned along the way through my investing. Welcome back. It's been a while. My name is Bruce Wang. For anybody that is brand new to the channel, smash the like button if you guys haven't already. And links are going to be in the description for everything that I go through in today's video. All the tools that I use for free stocks, for free crypto, everything's going to be in the links in the description. Also, we have a sponsor for today's video. Finally, we have a sponsor. Thank you to Moo, and we'll hear about them later on in the video. So let's see this portfolio. How am I able to collect $500 in dividends every single month on average? So I am heavily invested in the stock market now. I can finally say that. I have multiple portfolios here. All right, guys. I have Cash App, Robinhood, M1 Finance, Webull, and I use Simply Safe to track all of my dividends, basically. All right. So totally, my portfolio is valued at $320,000. $320,000 feels so weird to say that. Annual income is sitting at $6,455. So let's do some quick math here. 6,455 divided by 12. We're going to see a value of $537.91. So on average, every single month, I'll be collecting roughly this much. All right. If you guys seen my older videos, it took me years to get to this level. All right. So we're in my third year of like showing my portfolio on YouTube, and it has massively grown throughout the years. And I'm going to give you guys all my tips that I've learned and, some things that I'm going to be doing moving forward from here as well. All right. So dividend yield on this portfolio is sitting at 2%. And this is kind of low. So over the last maybe 6 months or so, I've been focusing on growth stocks, tech stocks. I've missed the boat on them. I was able to now build up a decent position into a lot of these growth stocks like Alibaba, Tesla, Peloton. I even bought some Coinbase as well. With that, I'm going to be doing some options trading. If you guys are interested in that, also don't forget to subscribe for that. But we're going to go stick with the bread and butter of today's video, $500 in dividends every single month. So yield on cost for me right now is 2.24. So that means I bought a lot of these dividend companies with a higher yielding cost than it actually is now, than the dividend yield is now, if that makes any sense. Another thing that I've learned to do is stick with slow growth. Very slow and steady growth. So back in the days, I was investing in a lot of risky, high yield dividend companies. And because of that, a lot of the companies that I chose, they cut their dividends. And when a company cuts their dividends, you're not going to have that steady and slow growth. All right. So some companies here that are on the borderline safety score for me is ExxonMobil, Ultra Group, JP Morgan, AT&T. And I'm heavily invested into like Exxon and AT&T here. But these guys, like borderline safe for Simply Safe dividends is pretty good. They're not going to be, messing with their dividends anytime soon. Moving on into the likely safe, we got Chevron, IBM, Starbucks. These companies, most likely, they're not going to be touching their dividends and, as in cutting their dividends, but actually slowly growing their dividends over time. Over here, Realty Income, this is about 11.9% of my income. A great dividend payer, pays me a dividend every single month. And I'm going to show you even more in-depth analysis onto, some of the companies that I heavily rely on for this dividend income. And going into these here, you can see that they're a 99% safety score. So basically that means you're good. You're going to be good if you invest in these companies. These companies are going to be growing their dividends all the time. Moving into the unrated. So I do own some ETFs here, which they do not pay any dividends. Gap here does pay a dividend now. And one thing that I have to say, if you guys stick with me, you're going to see a lot of the good and bad through my investing. And yes, I've made a lot of mistakes buying some companies that, I probably shouldn't be buying. But with that said, I do have a winning record when it comes to all the stocks that I do own. And I do still pick some poor performing stocks. So let's jump into the income calendar. And after this, we'll jump into the stocks that I own and like how well have they performed. All right. So this is my portfolio over the next 30 days. Next 30 days, you can see there. On May 6th, which is today, I'm going to see $404 in dividends. Not too bad. Most of this is going to be coming from BND. Apple is going to be paying me about $7 next week. Costco and Realty Income in total will be paying me $67.48 on the 14th. So with all the companies that I do own, you can see, let's take a look at the year ahead as well. The year ahead, $6,455. This is what the year ahead is going to look like. In the months of December and March, I'll be receiving the most dividends, and in the months of August and February, these months, only $300 in dividend. All right, so second tip before we jump into looking at more of these dividends, you're going to see that I own a lot of different stocks. And, this was a mistake that I made as a beginner, and I just kept all the companies that I did own. All right, so if you're going to go into investing in the stock market and you're going to want to like own 20, 30, 40, 50 different types of companies, different types of stocks, it might be better to just own an ETF. Personally, I like ETFs. I think ETFs like VOO, Vanguard's, S&P 500, or SPY, these are great for beginners. And the reason why this is great for beginners is because, an ETF like VOO, you're going to own the top 500 companies in America. All right. So a lot of these companies I own individually in my portfolio. So if you guys don't have time, if you guys are just beginning and you guys just want to be invested, most, hedge funds and money managers, they don't even perform as good as the S&P 500. All right. So that's something that you guys should definitely look into if you guys are kind of worried that you're going to be picking the wrong stocks. You guys don't really know which way to go. You're probably going to do better investing in an ETF than going for individual stocks. So I have experience investing in ETFs and in individual stocks, and time-wise, ETFs are better. Learning about the companies, learning about their PE ratio, the cash flow, the income statements, the balance sheet and stuff like that. Yes, doing fundamental analysis on individual stocks will be a lot better. But, you have to figure out where your strength lies, right? You have to figure out, is your time better off just investing it and forgetting it, or do you really want to learn about these different individual stocks? So that's something for you that you have to decide for yourself. Let's jump back into the dividends here. So $6,455, that's about $530 every single month on average. And here you go. These are the totals that I'll be seeing from a lot of these companies. Gap, I'm going to be seeing $970. Ken, I'm going to be seeing $398 in May. So this is it seems like it's a special dividend. Most dividends, they're going to be paying you quarterly. There are a few out there that do pay monthly that I talk a lot about on the channel as well. This is Realty Income. I'll be seeing $63 every single month from them moving forward here. In total, $767. Another monthly is SPHD, $303. And if you look all the way here on the bottom, this is the one that is paying me the most, ExxonMobil, the opposite of Tesla. $1,700 in total. As you already know, in total is $6,400. All right, so now I want to take you into the entire portfolio here, and I'm going to show you guys some of the best performing stocks and worst performing stocks. And I have to let you guys know. All right, this is based off of previous research. All right, from here on out, a lot of the companies that I do buy will be based off of what I think these companies will be doing. So there's a lot of these companies where they're overvalued and I won't be buying them. And there's a lot of them that are undervalued and, I might be picking up some more shares and building up a stronger position in them. So stay tuned and subscribe if you guys want to learn more about these individual stocks as well. So as you can see, I have 54 holdings and we're going to sort this out by gains and losses. So Gap here, 145% gains. And when I first bought Gap, this company did not shoot out any dividends. They actually cut their dividends and they weren't paying them out. And they said that they would start to pay out dividends again, maybe in 1 or 2 years. But, as we all know, we're going through the pandemic, and it's not as bad as it seems, right? The economy is still moving along, chugging along. And so Gap was doing pretty well as a company, and they decided to, start sharing some of their profits with the shareholders. And so now we're going to be seeing $970 again. A lot of that happened, right? A lot of companies that I bought into over the pandemic era, over the 2020s, they cut their dividends or, paused their dividends. And because of that, I was able to pick up a lot of these companies at a lower price. Is that the IRS? All right. No, that was just a fire department. Next year, we have 105% gains from Noor. And next year, we have a 105% gain on Nucor, UPS. UPS, I believe they're going to do as well as, as Amazon does, right? As they deliver more and more packages, UPS will reap a lot of benefits from that. So 78% from there. Caterpillar. If you guys don't know anything, I'm also in real estate. I own 3 rental properties, and I actually just verbally got, and I'm actually trying to buy a new house right now, and that's why I haven't been posting that often. But definitely, I'm buying a new house. I just got a verbal confirmation that they accepted my offer. They just need to sign on the dotted lines. So I'm hoping for the best here. Because of that, Caterpillar and the lumber cost, a lot of new houses that are being built, and they're not being built fast enough to handle the demand. So that's why a lot of housing prices have shot up, lumber prices have shot up, and Caterpillar, they need those houses to be excavated. They need the foundation to be excavated, and a lot of these gains that I'm seeing is because of that, because of this the demand in construction. Moving down here, JP Morgan. So as you can see, like I said earlier, I own a lot of companies that did well over the past 3 years that I've been investing, and I do have a few misses here. X1 is a 3D printing company. I'm down 51% on it. I'm not planning on selling it. Just going to be holding it. Maybe at the end of the year, I might sell some just to, cut down on my capital gains. Canopy Growth, another marijuana stock, down 24%. Coin, I'm doing the wheel strategy with Coinbase right here, and it's not doing too well. It's not doing too well. And as you can see, a lot of these companies, they don't pay dividends. All right, so a lot of the companies that I bought over the past few months are growth companies like Peloton and Alibaba, and these guys just haven't been performing that well. And we're seeing a slight correction in the markets over the last few months, I would say. So stay tuned, subscribe for that as well if you guys want to know what I'm going to be doing with my positions in these companies. So a word from our sponsor. Today we're sponsored by Moomoo. Moomoo is a new brokerage that just opened up, and this brokerage is blowing up. So if you guys are, if you guys want to graduate from Robinhood into a more advanced trading app, definitely check out Moomoo. You guys can also get some free stocks. So some of the things that I like about Moomoo since I started using them: commission-free trading, free level 2 data. They have extended trading hours. This one is a big one, all right? Because, sometimes I can't pay attention to the markets all the time. And, when I was using Robinhood, I think they closed their trading hours at like 4, right? But with extended hours, you can trade up until like from 4 a.m. to 8 p.m. Think about that. You can basically trade all day long with Moomoo. And lastly, they have in-depth quote and analysis. So a lot of brand new features that I've only seen on a few professional trading brokerages that some of the brokerages that I'm using right now don't have. If you're just a beginner, this might be a little bit intimidating for you. But like I said, if you guys want to graduate from Robinhood, jump into a more intermediate and like start to learn a lot faster about investing in the stock market, definitely this app is right for you. So one of the companies that I've owned for many years now is Apple. Let's jump right into it, and you guys can see. And as I'm looking at this, there's a lot of crucial information that you would have to search for in other trading apps that on Moomoo you can just find all in one place. So let's say if you want to take a look at the dividend yield, Apple has a 0.63% dividend yield, less than 1%. And again, this is a 99% safety score. So very interesting, all right? So if you're an active trader, this is gonna be a lot more advantageous to you. Everything is all at your fingertips. So again, I just want to thank our sponsors, Moomoo. And if you guys want to get your free stocks with Moomoo, all you got to do is just check out the links in the description. So if you guys want more content from me, go check out these videos here. Check out the links in the description for free stocks, free crypto. Follow me on Instagram, follow me on my second channel, and I'll see you guys in the next video. Thanks for watching. Bye.